The world of investing is changing, and it's changing faster than ever. The old landmarks, they're shifting. New territories are opening up, and the routes to success, well, they're being completely redrawn. So let's dive into this new investor's map for 2026 and figure out how we're going to navigate it.
And really, this is the question for every single one of us today, isn't it? Because the forces of tech, regulation, and global economics are creating a landscape that looks nothing like the one from just a few years back. And sticking to that old map, that's a surefire recipe for getting lost.
All right, so let's start with the biggest, most talked about landmark on our new map, artificial intelligence. It's a massive story, but it's really like a coin with two very, very different sides. So on one side, you have this incredible promise. The sheer amount of money pouring into AI could seriously supercharge the economy. Vanguard is projecting that U.S. GDP growth could hit 3%. We haven't seen that kind of expansion consistently in a long, long time. It honestly feels like a boom is right around the corner.
But here's the other side of that coin, and this is what's so fascinating. Even in Vanguard's main scenario, the one where AI drives all that strong economic growth, the projected 10-year return for U.S. stocks is surprisingly kind of quiet, just 4 to 5%. It's a real head-scratcher. So the crucial takeaway here is this massive disconnect. A booming economy doesn't automatically mean a booming stock market for everybody. Think about it. High valuations, insane competition, and the just astronomical cost of AI investment. It could mean that all those economic benefits don't really trickle down to shareholders the way we might expect. Okay, so moving beyond tech, the actual rules of the investing game are changing too. There's this huge regulatory fault line opening up between the world's major economies, and it's making the whole picture way more complex for us investors. And you can't see this split any clearer than with ESG. That's environmental, social, and governance investing. The US and the EU aren't just taking different paths here, they are literally heading in completely opposite directions. Over in the United States, we're seeing a really decisive pullback from federal climate policies. And what this does is create a whole lot of uncertainty for investors and for companies that are focused on sustainable finance, because the rules of the road are suddenly way less predictable. Meanwhile, the European Union, they are going all in. They are building this massive, mandatory rulebook for sustainability with things like the Corporate Sustainability Reporting Directive, or CSRD. And this isn't just a gentle suggestion. It's a fundamental change to how companies have to operate and report in Europe. Okay, so with all these huge, complex forces swirling around, what does this actually feel like on the ground for a real person? Let's take a look at how one young investor is charting their own course through all this. Just look at this. This is from a 17-year-old on Reddit. And it's just a stunning reminder of the most powerful tool any of us have as investors, time. Starting early and thinking long-term, it can lead to absolutely incredible results. But it's his journey that I find really fascinating. He started out with a strategy that's super popular on social media, focusing on US stocks and dividends. But then he learned more, he dug in, and he realized that total return is what truly matters. And he pivoted. He shifted to a broader, globally diversified portfolio. And that right there, that perfectly illustrates a key skill for this new map, being willing to learn and adapt your strategy. And that need for a global view is more critical than ever. Because when we zoom out, we see the map is just riddled with challenges, especially for emerging and developing economies. This chart from the World Bank tells such a powerful story. See those red bars? That's the chunk of government budgets that's going just to pay interest on their debt. That means less money for schools, for hospitals, for roads and infrastructure. These rising costs are literally squeezing their ability to invest in their own future. Now, you might look at this and think, well, their debt-to-GDP levels are lower than in advanced economies, and you'd be right, but the pressure is totally different. Their capacity to manage that debt is so much more constrained, and that makes even these lower levels a huge, huge burden. And it's not just about the debt. This financial strain is happening at the exact same time these countries are getting hit by a perfect storm of other risks, from more frequent climate disasters to geopolitical conflicts and social unrest. It's a really complex and volatile mix that directly impacts the stability and growth potential for any international investments. So we've talked tech, we've talked regulations, and we've talked global risk. Let's pull it all together. How do we actually read this new complicated map as an investor? Here's the most important point. You cannot look at these forces in isolation anymore.
AI's future will absolutely be shaped by regulation. Those regulatory differences are going to create global opportunities and risks. And all of it is set against this backdrop of increasing global instability. The old simple strategies, they're now dangerously incomplete. See, navigating this new world requires more than just following the old roads. It requires a compass, a deep awareness of these interconnected forces. So the question is no longer about having a map, it's about knowing how to use your compass to find your own path forward.